Right, so you lot know the feeling. You see the RSI dipping into oversold on your favorite squid coin. You think sorted, this is the bounce. You load up the bags,
Yep.
and then it just keeps dumping. Straight to the floor, you get wrecked. We've all been there.
Speak for yourself, mate. Some of us don't just chuck our rent money at a squiggly line at the bottom of the screen.
Oh,
It's called discipline. You might have heard of it in one of your more traditional moments.
here we go. Mr. I only trade charts older than my granddad is going to give us a lecture. All right, Morgan, enlighten us a lot. How do you avoid getting absolutely rinsed by a fake out?
It's actually dead simple. You don't trust one signal ever. You build a proper confirmation model.
Right.
Think of it like your pre-flight checklist. You wouldn't take off in a bloody jet just because the go light is green, would you? Check the engines, the fuel, the flaps.
Depends how juicy the chart looks, but go on, I'm listening. What is this confirmation model? Sounds a bit stuffy. A bit CMT level 2 for our audience. Break it down street level.
It's not that deep, I promise. It's just about getting a few of your tools to agree before you risk your hard-earned cash.
Okay.
You're basically getting a second, third, and fourth opinion from different departments. The whole point is to layer indicators that measure completely different things.
Layering, like a good grime track.
If it helps you sleep at night, I think of it like building a fortress. First, you need your foundation, the trend. This tells you which way the war is heading.
Yeah.
I use exponential moving averages. The 21 and the 50 are a classic pair. If the short, fast one is above the long, slow one, we're in an uptrend.
Right.
We are only looking for buys. That's rule number one. Don't fight the tide.
Okay. EMA cross, got it. The trend is your friend till the end. But that's slow, innit?
Well,
By the time they cross, half the move is done. I need the explosive part. I need the engine, the momentum.
and that's exactly your second layer, your momentum oscillator. This is your territory, Chris. The RSI, the MACD, the fast twitch muscle fibers of the chart.
Right. So my EMAs are looking bullish. Now I'm hunting for the momentum switch.
Okay.
I look at the MACD. I'm waiting for that blue line to hook up and cross above the orange signal line. It's exciting. That's the signal that the buyers are waking up. It's a spark plug firing.
It's the spark, but it's not the fuel. This is the bit that costs 90% of new traders their account. Volume. You have to check the volume. Price can lie, momentum can lie, volume is the truth serum.
Go on.
Has it a lie detector? Think about it. If the price of a stock is pumping, but the volume is tailing off, what's really happening? There's no big money, no conviction. It's just a few retail muppets playing past the parcel.
Yeah.
And it's going to fall over as soon as a professional trader looks at it funny. A proper, sustainable breakout needs a massive spike in volume.
Okay.
It's the footprint of the institutions. No volume, no party. The footprint of the institutions.
I like that. The lie detector. Okay, so we've got our checklist. Trend from the EMAs, momentum from the MACD, and conviction from the volume. We're building a proper case now, Morgan.
We are. And there's one last piece, the most important one for staying in business, managing your risk, which is all about volatility. So how do you set your stop loss?
Honestly, I eyeball the last low, stick it a bit below that, and then chew my nails off.
I knew it. The true crypto degen. Look, you need to use the ATR, the average true range. It measures how much the asset is bouncing around.
Right.
If Bitcoin's daily range is $2,000, your stop needs to be way wider than on some dead stock that moves 50p a day. The ATR lets you set a dynamic stop, say 1.5 times the current ATR below your entry.
Okay.
It breathes with the market. It stops you getting wicked out by noise.
All right, let's put it all together then.
Okay?
A proper A+ long trade on, say, Ethereum. What's the battle plan?
The battle plan is this. 1, the 21 EMA must be above the 50 EMA. Big picture is bullish. 2, we wait for the price to pull back to that dynamic support zone. We're patient. 3, the MACD climb crosses up above its signal line. Momentum is now on our side. 4, and this is the clincher, the candle that gives us that MACD cross has to have a big, fat, obvious green volume bar underneath it.
Wow.
The lie detector says it's real.
And then only then do you finally click buy. Mate, I could have had a kid sent him to uni and seen him graduate in that time.
And you could have been liquidated 3 times in that period. Look, you might miss the first cheeky 10% of a move.
Yeah.
I'll give you that. But you'll also miss the 90% of fake outs that send you to the shadow realm. I would rather catch the safest, most confirmed 50% of a move twice a month
Right.
than gamble on 100 dodgy setups. It's about survival.
I get it. It's probability stacking. Each confirmation is like adding another expert to your team that gives you the nod. It's turning a punt into a proper business plan.
There you go. He's seen the light. You're building a case like a lawyer. By the time you place that trade, you should be able to stand up and list 4 or 5 solid, evidence-based reasons why you're in it. If you can't, you're just gambling.
Right, fair play. It's a bit more grown up than aping into a coin because some geezer on Twitter posted a Shiba Inu with laser eyes.
A bit more. And this, my friend, is why I still have all my hair and you're, well, what? Let's just say you're looking more aerodynamic these days.
Right, cheeky. My hairline's fine, thank you. It's just market-induced stress. So the magic isn't the indicators themselves.
No.
It's how they harmonize.
Confluence, you called it. Confluence. That's the word. When the trend, momentum, and volume all start singing from the same hymn sheet, that is a high probability setup. That is your A-plus trade. And in this game, you get paid to wait for the A-plus trades.
So you're not clicking buttons all day?
God, no. Sometimes I'll watch a chart for a week waiting for that one perfect setup.
A week? A week in crypto is like a decade in your boomer stock market. But I hear you. The principle stands. Patience, system, not prayer. See, there's a proper trader buried in you somewhere under all that Wen Lambo energy. We'll see. I might add a 5th confirmation to my model, a full moon, or maybe what Elon Musk had for breakfast.
And that's why you stick to the digital casino, mate. Don't bring that rubbish to my Forex pairs.
All right, listen up, you lot. We've just handed you the blueprint. Don't be that person that loses their savings on a dodgy signal.
Please don't.
Think about these layers. Build your own fortress. Backtest it.
And be patient. Let the A-plus trades come to you. Don't go chasing noise.
Wise words from the old man. Right, that's enough school for one day. If you think we're talking absolute rubbish, or if you want to show off your own confirmation models, we want to see them.
Yeah.
Get in our chat group. The link's down below, where it should be. Hop in, have a laugh with us, and don't be a stranger.
We'll be in there. Probably still roasting each other. See you on the inside.
Now, here's a question we like you to think about. What's the one indicator you trust the most, and which one has lied to you the worst? Let us know in the chat. Cheers.